Hey, it's Keith here. This is your TMZ. I kind of took off the celebrity gossip news, and this is either going to be your Tuesday or today, Thursday mortgage zone. So, kind of depending what's happening with the economy, I'll release these once a week, and it's to keep you updated and educated on what's going on, so that you can feel well informed, and when the time comes, make a very good and confident decision. Right? So, let's kick this off. So, when we're looking at the charts, we've gone over this before. If you're unfamiliar to it. Uh, when you see this chart on any given day, interest rates are volatile, as you can see. Red is interest rates worsening or trying to go higher, and green is interest rates improving or going lower, right? So as you can see, what's triggered here in the last 48 hours, a lot of this is coming because the Federal Reserve is talking about another rate hike. So you can simply Google Fed rate hike and it's going to come up. It's most likely that it's been anticipated it's going to be a quarter of a point in interest rate hike. Now, that doesn't mean that your interest rate on a mortgage just jumped by a quarter of a point. In most all cases through history, which we've seen pretty much repetitively, when the Fed hikes the rate, we see the interest rates on the long term improve. So don't get too nervous there. But right now, because it's already being talked about, the stock market, the financial markets are already reacting to this. By the time the day comes, don't be surprised if we do see a little bit of volatility or a lot, just because of the fact that it kind of builds up from now until then. And a quarter of a point is, it is what it is, right? So the other thing that you're going to be hearing is the US recession. You can simply just Google this and read about it and put yourself to sleep if you want, depending on how nerded out you want to get like me. But the whole thing is, if they're now saying it's going to really start to kick in, as we saw, you see unemployment numbers start to go up, and they anticipate to come late 2023, and they quote unquote right now it's mild. A lot of people argue that fact because they think that the Fed has overdone their rate hikes like they have traditionally done in history, and they think they might have done it over again. So this is all yet to play out. But what does this mean for us, Keith? Well, what I wanted to really bring the education on here, again, this chart shows the period of time of each U.S. recession, representing the gray bars. And as Fed hikes the rate, you can see it each time they hike the rate, it causes a recession. So here's the dot-com bust. Here's a Great Recession, COVID recession. So it's the same pattern through history, right? Well, what happens with mortgage rates? Why they're talking about recession and this is important. So if you buy a house now or for the future, of course, it's never guaranteed. If I could, I'd be a millionaire, right? Play the lotto. But if you look through history, how it's always played out, during a recession, interest rates do improve and go lower. So again, there's the dot-com bust, the Great Recession, the COVID recession, when we saw the lowest rates in history. Where I wanted to just close this out and finish this off is, please keep in mind, the media hasn't picked up on this, and I highly doubt they will, at least locally or hyper local to where you're going to be looking. All of these gray bars represent a period of time of recession again, but look at what happens to the housing as far as housing values during a recession. Why does housing go up during a recession? Except with the exception of the Great Recession that was led by bad lending practices. Just as a refresher again, why it goes up is a supply and demand issue. So I'm going to have another post coming up on social media if you follow me, or my YouTube channel. I'm going to be talking about the percentages of homeowners that have a rate of 6%, 5%, 4%, and then 3 and lower, right? Well, 70% of the population have a rate of 4% or lower. So if that is the case, they're in love with that payment. If they sell, let's say they're 3%, they get 6% today, doubles the payment no matter how you look at that scenario. Not really that appealing, right? So, honey, I think we love our payment and we should love our house a little bit more. See if we can just deal with it. Maybe remodel instead of looking to buy, sell and buy, right? So that's the dilemma. You have more buyers still trying to buy. Well, if we then go and pressure rates lower, as you can see here, when interest rates start to pressure lower during the recession, right? Well, that's going to bring more buyers back to the table. And if those buyers don't feel in their job area that they're going to have any type of risk of layoff, then you bring them back to the market with lower inventory, and adding more buyers causes the home values to start increasing. That's what causes the appreciation in value during a recession. So just keep that in mind. All the loans that we're going to be talking about have no prepayment penalties. So there's always the strong chance that if you buy now you're going to be able to refinance and improve your financial position. Again, I'm going off of everything that data is showing, what the gurus are saying, and how this is going to play out. So apologize, this one was long today. I promise to keep it shorter for the future. If there's any questions, please feel free to reach out. Thank you very much.